Hey there, it's Ted Thatcher, president here at Bright Lake Wealth Management, and I wanted to bring you a market update today. There is a whole lot of data to look at right now. We've got new labor data, we've got GDP prints, we've got PCE, a measure of inflation to discuss. So at the top there, if I could start with PCE was actually up 0.3% month over month. It's trailing at about 2.6% year over year. Now, PCE is important because it is the number one measure of inflation, along with the CPI, the Consumer Pricing Index, that the Fed looks at in its decision-making around interest rates. And of course, the Fed also came out and said for July, they were not going to raise or lower the federal funds rate. Jerome Powell came out after the fact and actually made some interesting comments as we look toward the September Fed meeting. There really wasn't a tremendous amount of anticipation for the Fed to lower interest rates in July, although there was a little bit of interesting occurrence with the Fed as a whole. The Fed is a board of individuals, and for the first time since 1993, there was 2 dissenting voters on the Fed board for what to do with interest rates. So we can see that there is starting to be a new narrative that's taking place. That being, it does look like there's more and more data to support a potential lowering trend of interest rates. So in addition to PCE and the Fed's rate decision, we also have other economic data that was released. Very notably, the GDP, the gross domestic product print came out. And so that came out much, much higher than expected, which basically means the economy is growing faster than we thought. In Q1, GDP was actually down. Because of the way it's calculated, a lot of companies were making purchases of goods ahead of what they anticipated to be new tariff news. And the trend really is opposite this quarter. The growth rate for the economy is much, much above expectations. And so between the small increase in PCE, the inflation measure the Fed looks at, and the GDP print coming in hotter than expected, that I think really solidified the Fed's decision not to lower interest rates in July. Now, as I started to hint at earlier though, the Fed did come out, Jerome Powell came out, and he made some interesting comments specifically looking forward to September. There has been this anticipation of at some point the Fed changing direction here and continuing a lowering interest rate cycle. He did say though that they had not made a decision for September. They're going to continue to look at the data, which by the data we've gotten here, these are all generally data indicators that would lead us to believe we would not expect a rate cut. Up until the labor numbers came out, there was a whole host of data revisions specifically around new jobs produced in the United States. A lot of the data over the last couple months was revised, meaning that less jobs were produced than we originally expected. And so the 2 primary drivers for the Fed deciding whether or not to lower interest rates comes down to labor and inflation generally. And so since inflation has kind of stuck in that middle 2s, high 2s range, and we had a hot GDP print, that was data that definitely would tell us the Fed would kind of stay its course, probably not consider lowering. Again, up until this new labor data that we got. That is a notable piece of data that really could start to change the narrative for what we might expect happens in September. So we have our eyes very closely on that. And finally, we got a little bit more data around the consumer. So both the consumer sentiment and consumer confidence numbers were also released. Now, consumer sentiment, remember, refers more to how the average consumer feels around the economy, how they feel the economy is doing. Now, consumer confidence, while they sound very similar, refers a little bit more specifically to how the consumer on average feels about their own financial picture. Regardless though, both of them increased month over month. So we see a positive trend for the consumer's perspective on the economy and their own finances overall. So when we see GDP come in such a positive way, when we see the PCE print come out the way that it did, when we see consumer confidence and consumer sentiment, pushing upward, those are generally good things for the economy. However, they don't always tell the Fed chair to lower interest rates. That message has really been sent by the recent labor data that we've gotten. And so, of course, it becomes Jerome Powell's job to weigh that data out and actually make a decision on what's going to happen in September. There's going to be a lot more data that comes out between now and the next Fed meeting. I really have my eye, of course, again, on what happens with the labor data going forward. We'll see you next time, and as always, remember, there's hope in a bright future. Thanks.